What's going on, guys? Welcome back to another episode of Money Moves with Mr. Ryan Breedwell.
Hey, y'all.
I'm your host, Matty. Today we are talking about some of the Fed's next moves. We've got some Senate drama or some Senate, I guess, positivity.
Yeah.
That they're moving some
I'm happy.
big, beautiful bills forward potentially. We got all-time highs in stocks. Mm-hmm. We've got housing inventory gaps increasing. We've got another micro strategy.
Don't tell me.
Strategy, but
Whoa.
for Ethereum this time.
Oh yeah.
We've got some interesting takes today, so let's go ahead and dive in. First and foremost, as of today's conversation, Trump's obviously been pressuring. I mean, Powell's been getting pressure from a lot of different angles, socially, politically, to reduce interest rates. Mm-hmm. What we're seeing right now in July, as of today, after his talk, a 79% chance pause in July. September, we've got a 75% chance of a cut.
Yeah, that's a real 180 right there.
That's a big shift. Mm-hmm. October, a 61% chance of another cut, and in December, a 53% chance of a cut. So right now, we're seeing the Fed and the market seem to give some direction that September seems to be the month that we're going to see the first cut of 2025. Is that accurate?
I feel like I should say it's not going to happen.
But
really,
are you
back
are you a little gun shy after
here?
saying that you thought all those cuts were going to happen already?
I'll tell you what, if my job, thank God my job is not predicting rate cuts, because, man, I suck sometimes at it. But it looks right now, but the problem is that's, in January, July looked like a home run, right? So let's see what happens in the market. A lot more talk about it now, though, than there has ever been.
Why is that?
Well, I think that consensus on Wall Street, at least the people that I talk to, is that we do agree that money supply does need to be loosened. But we also agree that cutting interest rates down as far as Trump wants to could and probably could or would cause inflationary pressures.
Yeah, I mean, he's talking 1% to 2% is where he wants to see rates.
Yeah,
at.
over a long period of time that can happen, but you can't cut. You can't just be like interest rates are too, it will cause a melt up.
Yeah,
that's a bad. It sounds good, like you want to see your account go up that fast, but what it does in the background, the ripple effect of that, is not positive for the market as a whole. Too many dollars chasing too few goods. Bad. What I do think will happen is I think Powell will make it through to the end of his term.
Which is what? End of this year?
Middle of next year, I believe.
Middle of next year. Okay.
I don't want to get quoted on that, but I think it's March or April for some reason. I need to check on that. But I know I think that if he does, I think he's going to have to buckle maybe. And then, it looks like to me he doesn't want to, but I think he's going to need to soon. It just, even if the data says, XYZ, because that's what they say, or they're not trying to do something because tariffs aren't inflationary, I can tell you without guessing, it's expensive to get money. Fact.
Yep.
And the reason they're not doing, lowering rates is because they're saying, okay, well, we don't want to cause an inflationary pressures, and I get that. And we don't know what tariffs are going to do. Okay, I get that. But a 0.25%, can we start moving down?
Yeah, it's not like that's going to have a catastrophic impact that's going to lead to a melt-up.
But we can start pushing things and seeing the trend and where that leads to. And
that's why I think that's where more people are a little frustrated, right? Of hey, we've had a few cycles of data sets that were opposite than what projections were expecting and what the Fed was saying is the threat.
Yep.
And we're not seeing that. So why can't we at least inch down? I think today, I probably pulled up on my phone because it's in my Telegram, but Trump made a post I think it was on True Social or somewhere in Telegram, that essentially was showing, let me see if I can pull it up, that world central bank rates.
Oh, yeah. We wrote Jerome Powell. I know.
And it shows, basically.
It's on the White House press secretary's Twitter.
Okay, so that's where it was.
Yep.
But and that's where he said we should be paying 1% interest or better, right? But essentially he went and showed, that most of these other big countries have already made multiple rate cuts. And here's where, Switzerland is at 0.25%, 25 basis points. Japan's at 50 basis points. We're obviously sitting right at 4.5-ish right now. And what did he write on it? Jerome, you are, as usual, too late. You have cost the U.S. fortunes and continue to do so. You should lower the rate by a lot, hundreds of billions of dollars. Donald J. Trump.
Line.
Yeah. So you would think that we're getting a little bit more bullish on the idea that rate cuts are coming, and it's going to have a positive impact and some relief in a lot of different facets of the economy as a whole, correct?
Yep.
So the one thing that I know a lot of people, and many critics of tariffs continued to, tariffs are going to cause more inflation and it's going to have a negative impact on our economy and this and that. So I tried to dive in, and this was a study from Yale Business School that was tracking all of this year to date. And this was at least the most updated report as of 2 weeks ago, or late June. So 2025 U.S. tariff revenue in billions of dollars. In January, and this was Biden-era tariffs, $8 billion. February, which was like a blend of Biden and Trump early tariffs, was $7.25 billion. Then the 10% import tariff started in March, $9.6 billion. Then 145% Chinese tariffs, 25% auto tariffs or some other stuff worked into there. April was in the 16 to 17 billion range. May, when he implemented the 50% steel and aluminum tariffs, 22 to 23 billion. And then as of June right now, depending on where the figures ended up, they were estimating
30.
between 28 to 30 billion in broad
sure.
tariffs. So total from January to June, depending on where all the data lands, on the low end, call it 88 billion in tariffs, and on the high end, a little over 95 billion in tariffs, which is up almost 100% from 2024.
Yeah.
About 86%. And so all the critics that just dragged Trump, dragged anybody that was supporting tariffs through the mud, and all of these reasons why. And there was a lot of, in my opinion, qualified and smart people that were just trying to rip through this. It just shows you how many people don't truly understand, because these were people that were supposedly very smart and intelligent, have economic backgrounds and all this kind of stuff. The revenue that he brought in through tariffs, the billions collected, killed all of the low forecasts that were estimated. It has supported infrastructure, AI, and debt reduction. Essentially, with what we're seeing here, it's an estimated $2.4 trillion by 2035. The rampant inflation that was going to happen because of these tariffs, CPI at 2.4% in May, and pretty much everything coming in way cooler than estimates projected, print after print after print over the last couple quarters. We've got actually relatively stable prices and a lot of stuff on the retail market. Retailers are absorbing a lot of these costs. The price hikes that they said were going to be rampant were limited to just 1.4% increases across the board on average, which is a delta that's relatively okay for people to work with.
Yep.
The trade leverage and the ability to renegotiate some massive trade deals for us. One over the last week being with China and us, 30. What was it? U.S. tariffs on China 30%. China's tariffs on U.S. 10%, which opens up their market to us in a big way. and still allows us to, get what we wanted of them coming into the U.S. And that's just one, right? So better trade terms. You got the U.S.-UK deal, auto tariff rebates, cut economic drag 40%, manufacturing boost. We got over $4 trillion that is being invested in the United States. GDP came in stronger despite the tariff impact. I mean, unless I'm missing something, tariffs, the way he played this, game of chess, policy-wise, economically, massive win for the U.S. At least what we're seeing right now. And I don't know, again, second half of the year, Powell continues to say, oh, well, we still believe that there could be some inflation impact because of tariffs, and that's what we're starting to see in some of the data. Help us break that down.
Well, the new negative narrative that they'll come out with now, mark my words, is, well, yeah, but the revenue will slow down. But to finish that sentence, what they're not saying, and that's because that's actually a positive if it slows down, that would mean that consumers are shifting to domestic producers, and we'll make more money off of domestic producer purchases and that flowing through in our market than the money going overseas. The whole reason tariffs exist is to recapture the loss of revenue domestically so that it's like it didn't happen. So I just think that people, again, nobody really had a real big grasp on tariffs. We talked about them when I was, getting my licensing and studying in economics and stuff, but we've never had a real serious tariff kind of deal going on like we have now in our lifetimes. But it should continue to accelerate, and when it starts to decelerate, it's just indicative that means that there's going to be more domestic production. That'll huge positive impact to the job market domestically. That'll create jobs. That'll encourage foreign companies to develop more in the United States, which will create even more jobs. So again, I think that this is a problem that can self-manage and fix itself. And I do think that it's not perfect. I don't know of anything that is, but the tariffs have worked out very well. And I think the naysayers are just naysaying, like in our world where you have people that say there's constantly going to be a real estate market crash because 2008 happened and everybody can't move on, almost 20 years later. And same on my end, oh yeah, but you can lose your head, your neck in the stock market. And they're talking about when the stock market dropped back to 700 or 800, it's trading at over 6,200 now. So it's just short-sightedness that typically gets in people's way on your side and my side of the street. The good news is in both asset classes, you can compound and grow your wealth and do it in different ways, but complementary of each other. And that's where most successful people have their heads at. And that's how I would take it. If you hear people talking negatives on tariffs, you should put them in the same category as people who tell you that the stock market doesn't work or tell you that real estate's a fool's game. Not that real estate doesn't work for you or can't work for you, but that it doesn't work. Oh, you can't buy real estate because it just doesn't, it works. It's hard. I think a lot of people think real estate's easier than it is. You have to become a landlord and manage a property manager, which is not an easy task. But if you can do that successfully and buy good deals, same thing on my end when you can be a financial advisor. You're charging people a fee to leverage professionalism. So those two things working in tandem is what I would focus on. The tariff ideas, it's going to continue to create revenue. It's great if we can just be around $20 or $30 billion a month because that's 3 or 4x what we were getting. And then we can use that money on programs and to help ease off other social programs and social services that are getting stressed.
What are your thoughts on the big, beautiful bill? So Trump's big, beautiful bill passes the Senate.
Back to the House now.
Which was a big deal. There was the parliamentarian Senate that was stripping out a bunch of stuff that Republicans liked. This was a Democratic kind of seat, unelected seat that people were upset about, and why is she able to strip these things out? And so there was a lot of back and forth that kind of got everybody back to the table. They represented the big, beautiful bill to the Senate. It got the big votes today that it needed to go back to the House, which is obviously a Republican-controlled House, and is looking like one step closer to hitting Trump's desk for signature, which would be a big deal for him, his agenda. That being said, there's still a lot of outspoken individuals, you got the Thomas Masseys, you've got the Rand Pauls of the world that really don't like it, think that it's not in the best interest of Americans, that it's just, again, increasing our national debt, I think by 4 or 5 trillion over the next 4 or 5 years, something like that, which is the largest increase in debt that has been in one of these bills. So I'm just curious, what are your thoughts on it? How, does it impact the stock market, investors, businesses? Good thing, bad thing? Or are you just looking at it from a different lens?
I think that some sort of bill was going to pass regardless. And so at least this version of a bill, which has some language in it that I think will be beneficial to corporate and small business owners, I think that that's the real winner. Whatever was going to happen, and we, people that are smart were going to, be successful and move forward. I think the best thing that is in that bill is you get the no tax on tips, no tax on overtime. That's going to be really impactful for lower income and middle income earners, especially people in the service industry. And then if we can see that flow back into the market, that impact is to be seen. So overall, I think it's good. I think the thing that it sucks is that all the good gets, it's the constant same record. Oh, this helps the rich or whatever. I think that just is misconstrued because it's really just helped small business owners, and most of them are small corporations or pass-through entities, and they are successful because they work really hard and try to keep as much money as they can. So the corporate tax rate being as low as it is a benefit for corporate owners like yourself and I. Mm-hmm. Does that help W-2 wage earners? No, but that's why if you don't want to do that, you have the benefit of creating your own business and being an entrepreneur. But people choose to be W-2 wage earners and then complain about making the choice of being W-2 wage owners. So I don't quite get that. Nothing wrong with being a W-2 wage earner. It's just you're not going to get the same benefits as somebody taking the risk and running a corporation. And so you get benefits for that. So overall, I think it's good. There's definitely stuff in there that sucks. It's politics, but I'm happy. And I think that we can finally move on to the next big thing, which is not going to be a beautiful bill.
Yeah. Well, and to your point, I think it just continues to, I think, highlight why, these omnibus bills suck. And why hopefully we'll continue to spotlight more of this and be able to, because there was a lot of transparency brought to this bill that allowed us to strip out a bunch of stuff that, ideally was, in my opinion, good to strip out, and without some of that transparency, without some of that outward pressure that, quote unquote, we the people now understand we can put on politicians. And you got, of course, now we got the beef between Elon and Trump going back, at each other. And I think even today, what did Trump, somebody asked him if they would deport Elon. And he said, we're going to have to take a look at that. He's making posts about him. Elon's talking about creating another party at the end of the year and this and that, right? But I think, to digress off of that, this is going to continue to be a reason why hopefully these bills continue to have more transparency and pressure, and hopefully some reform will happen around how these bills are pushed through. Whether or not that happens or not, I don't know, but this is more of a window into these bills for the common person, like I'll just say myself, to understand what's actually in there and what we're voting for or what we're voting against than I've ever seen before. Yeah. I don't know. I mean, social media's created a different thing. I mean, this was Thomas Massey, who Trump is obviously not a fan of because he's against big government and more spending and debt. But he broke down on the Theo show why omnibus bills suck. And I thought it was a good kind of reflection and why we need to break up the bills so that we can vote on individual matters instead of a bunch of things all at once. And that's where, these little
nuances exist,
that just don't need to be in there and don't benefit anybody except for, certain interests. But this was a good breakdown of it. Let's give it a listen.
Right now, this would be 50% of solving the problem. Get rid of the giant bills, okay? the omnibus bills, the continuing resolutions, and even the big, beautiful bill.
Bring up omnibus bill. We looked it up the other day when Mr. Vance was here, but I just want to go over it again. An omnibus bill is proposed law that covers a number of diverse or unrelated topics. So it's not even really fair because you only get one vote on the bill.
Correct. And so
Theo
typically an omnibus
Theo's so
bill,
funny.
it includes at least 12 other bills. Why not put that shit on the floor one at a time?
I agree.
And then that way, you can go to your representative or your senators and say, why did you vote for that? Right now, they can say, well, Theo, I had to vote for it. I had a pay raise for soldiers, right? They literally will put a pay raise for soldiers in every freaking giant bill so that if you vote against it, you have to go back home and watch TV ads that say he voted against a pay raise for the soldiers.
Right. Even though he may have voted for 90 other amazing things on the bill, right?
Right.
And that was one thing that was tied in there that if you went this way,
Yeah.
it may have been like oxygen for grandmothers, right?
Literally, there probably is that in there.
But if you vote for oxygen for grandmothers, then they're not going to give.
I love Theo Von. He always finds a way to make, heavier, complex shit like this just fun and light. But that's a perfect example where I think more and more people are waking up to this kind of stuff. And I am very interested to see Trump is saying he's going to primary Massey, and Elon is saying that he's going to back Massey. So you got two big pocketbooks that are going to go at each other in the primaries here. I personally like Massey. I think at the end of the day, a politician that's fighting against.
And you don't have to agree with somebody 100% to not like them. There's politicians that I don't agree with so much that I get to the point where I don't. But, I'm fine with the bill because it's, the change that would need to happen for that is not going to happen as fast as he wants it. But moving forward is what he's saying, common sense based, and does it make sense? Yes, it 100% does. I don't know why that's so hard, but if you think about it for about 20 seconds, you can come to the conclusion. Special interests, things that don't need to be in the bill being in the bill, cronyism, lobbying, all those things going, behind door deals, closed door deals, those are the things that are happening, and it's unfortunate. And the thing is, some of it's beneficial to us and a lot of it's not.
Yeah.
And we just don't know about the lot of it that's not.
Yeah, and there's just always it just always reminds me there's always a way to manipulate and say things to fit what you want when really there's so much other truths in that are just not necessarily being accounted for. I saw this today too that said, what some people are forgetting is that they're so focused on cutting spending, which is a great idea. Of course, I think we can all agree, less government spending and, things like that. But they're not accounting for the growth that Trump is bringing in to the U.S. as well. And it's estimated that he's bringing in $10 trillion, over the course of his term, with more announcements every day of new investments. And so, to put it in perspective, right, let's call it, in relation to a family budget. If the family spends more than they bring in, there's two options: spend less and make more. And so Republicans are focused on spending less, which is great, but they're also potentially ignoring the fact that the U.S. is going to be making drastically more revenue to pay down some of that national deficit. Now, whether they've historically shown that they can do that and we should trust them to do that, I don't. So
that's the opposite.
That's the big concern, right? Is like, you can make that argument of we're going to spend less and make more, and we're going to trust these politicians to do that, when historically they've shown egregiously that they can't. So I think that's the concern people have. But interesting, and to your point, what this bill does is biggest tax cut in history for American citizens.
Yep.
Across the board.
Yep.
The biggest benefits to small businesses. And Pat David Bett made a post on this that I think at the end of the day, what this bill does, and I'll share this post in a second, is it is a net positive in a lot of people's eyes to the underlying fabric of capitalism, which America runs off of.
Yep.
Right? Like that is our infrastructure, our engine, our machine. And this bill is going to give it the necessary gasoline to continue to move us in the direction that we are selling the American dream and vision off of, right?
Yep.
And so what Pat David said was capitalism is the greatest economical system ever. It's the only economical system that benefits literally everybody. That includes communists, socialists, capitalists, you name it. Capitalism attracts innovators, entrepreneurs, job creators, and those who constantly look for solutions. If a city, state, or country suddenly forget this and starts taking capitalists for granted, capitalists simply move to another place that values them. Capitalists are never unemployed. He went on to say there are many states and countries that will always want capitalists. All you do when you try to hurt them is set them back for a few months or a few years, but they eventually get the last word. Not policymakers who use their power to destroy capitalists. They are the patriots of the economy. The future looks bright for capitalists and states who want to protect them. And after reading this headline today, which I think is a perfect example of a country that is spitting in the face of capitalism, small businesses, is United Kingdom. And the United Kingdom just noted today that they face the largest single-year exodus of wealth ever recorded in history. So when you look at what they've done and a lot of the policies that have impacted their citizens, their communities, their businesses.
Everywhere that you let
musical chairs of money.
Yeah, unfiltered immigration, and just anybody can come in and anybody can access our social programs and stuff. It's ridiculous.
Yep.
It's so weird that that's like something that has to be argued when it's completely obvious. It's a different part of the world with different immigrants, and the same thing is happening.
Well, and you've always said the money will go wherever it's valued and
Correct.
where it feels like it has opportunity. It's not going to
Correct.
stay. I mean, and that's a very big reason why we've seen a lot of businesses in California go from California to Texas, California to Florida, California to these states that actually are going to honor and protect the small businesses, the dollars and the risks that they're taking and infusing into their economy. And, you know, for example, we see two of the largest gas and oil refineries in California shutting down,
Yep.
all just because of policy.
Yep. And then that's going to cause a ton of jobs. It'll cause gas prices domestically, not domestically, locally in our state to increase. It's just bad politics. We have a great thing going, and you can mismanage a good thing for a period of time, but eventually it will reel back.
Well, let's talk about, you know, Trump obviously going to be somebody that many said was going to tank the economy, was going to tank the stock market. As of Friday, S&P 500 and NASDAQ both broke past their all-time highs.
Shocker.
What the hell is going on, Breedwell? And why is the stock market, in spite of sell-offs and all of these, you know, clickbait, fear-mongering headlines, continuing to outperform and hit new all-time highs?
Just because the market's looking forward and is happy with what it sees in the future ahead of itself. And so do I. We've been saying that the second half of the year is probably going to be the better of the two. And so far it's shaping up to be that. If we can get rate cuts, that'll especially add to that. But I just think that it's finally time, that policy is finally coming through. We have enough time to see it actually working. People can finally make some sort of idea of where the market is going and why it's going that way. So that to me is what's going on. Nothing more complicated than that. Just people now can say, okay, I can see clearly now, and I'm going to, now the rating is gone. I'm going to invest this way because, somebody said it was going to work. Somebody said it isn't going to work. It works. Somebody said it is going to work. Somebody said it isn't going to work. That isn't going to work. I can now see what is and isn't, so I can now make investments and bets and apply risk and layer on more risk. But I will say still, fund managers are still pretty underweight domestic U.S. equities. I think that's, not myself, but that I think is a huge mistake. I'm really a domestic equities player. We invest in some international companies, but the data is very clear. The outperformance on U.S. domestic stocks versus international.
Do you think that leaves some room for upside for those that are already in U.S. equities to ride some potential tailwinds of those larger institutional groups coming in and reallocating into some equities in the second half of the year? Or do you think that's...
Definitely. I think that what's going to happen is I think that the bet was made that the tariffs weren't going to work. And the fact is that they are. So that I think money's going to come out of some of the places that are not domestic U.S. equities, and I think it's going to flow back into it. I don't know, but I think that it is.
Yeah, that argument could be made.
Yep.
Well, talking about the big earners, two of the big earners for the year to date, Palantir was the best XPX stock in the first half of the year, up 80%. One of the best over the course of the last 30 days in the last month. Oracle up 32% last month. Mm-hmm. What's going on with both of those stocks from your perspective?
Earnings and revenue was really good on Oracle. They're getting AI integrated into their cloud system, and I think people are really liking seeing what that's doing. And then I think everybody knows the play on Palantir. They have, lots of things going on for them that we don't even know about because they're government contracted or they're doing things for the government that are not privy for most eyes. But we still want to see more revenue, higher revenue numbers on Palantir, and we want to see continued throughput on the Oracle because we're talking about a $650 billion company with Oracle, and that could be, they could be one of the next $1 trillion companies if things continue to fare the way that they're looking like they are for them.
Wow. Let's shift over to crypto. We've obviously got Michael Saylor and MicroStrategy continue to buy up Bitcoin.
Yep.
And would you say that's artificially inflating or holding the value, or is it just acting more as a backstop? Or
I don't know if his purchases are. I certainly think that he has some sort of like influence on the sentiment towards Bitcoin. Mm-hmm. But I am and still have always been more of a fan of more layer one and things like Solana and Ethereum and Ripple. Those to XRP, part of what Ripple issues. That to me, those make more sense. I think Bitcoin, the reason that people, in fact, I know the reason that people like it. The supply is very low, so it does not take a lot to move the price in an upward direction. And people are impatient and they want to try to get rich really fast. I mean, that's ultimately why Bitcoin is, very popular. Anybody who argues that, consumer behaviorism would just show you that that's got a lot of truth in it. Is that the case for everybody that holds Bitcoin? No. But I mean, if you gave somebody Bitcoin and they make a lot of money, they're instantly going to be like a cult follower. You give somebody Bitcoin, they don't make any money, and they're instantly going to hate it. Mm-hmm. So it's like there's not really a middle ground of people in Bitcoin. You either love it or you hate it. To me, that just shows there's not a ton of utility. And the reason that you either love it or you hate it is because you're either making money on it or you're not making money on it. To me, I don't like it, not because I haven't made money on it. I haven't lost money on it either. I don't have it. Just the utility value is very low. It has high input demands. There's upgrades on it and all this other stuff. That's wonderful. There's already stuff that exists that's better than it. And what's to say we can't even further upgrade that? So why would I add fucking rims to the horse-drawn buggy when we have a internal combustion engine? It just doesn't. It's just like we're trying to make you're trying to take that and now make it as good as something that already exists just because you like it, just because it's the first or it's Bitcoin or whatever, So I own no Bitcoin. I don't ever plan on owning Bitcoin directly. Maybe one day I will. But to me, there's more value in the Ethereum side and the Solana side and really focusing on transactional speed and settling and safety of settlement and how it can be used in ways like for real estate and in real estate, like for insurance and things like that. So to me, that's more impressive than Bitcoin. I mean, because honestly, Bitcoins are worth dollars. And so it's like the whole argument is all fizzles out and you're like, yeah, and what's Bitcoin worth? XYZ dollars. So it ultimately just always comes back to a dollar. It's like a currency that doesn't want to be, that wants to get away from the dollar, but if it had no 104, 103, whatever $1,000 value, nobody would buy it.
Yeah. Yeah.
So it's like, I just see that arguments eventually. People are going to eventually catch up to it when people get more educated on crypto. And I think it'll start to slowly fizzle out. It's still the most dominant. It's probably going to hold that for a while. So was IBM. Now we have Apple.
Well, your boy Tom Lee is working towards a similar model as MicroStrategy. Wall Street strategist Tom Lee is aiming to create the MicroStrategy of Ethereum. I know you like Tom Lee. I know you like his reputation, his company, the fundamentals that he approaches investing with. What are your thoughts on him following a similar path as Michael Saylor, knowing that you've been somewhat critical of that model and strategy? More so maybe Michael Saylor than the strategy, but what are your thoughts on what Tom Lee is doing and how that could potentially impact Ethereum over the long term?
I think the similarity is holding a cryptocurrency, but the difference is Tom Lee is starting a fund with the upfront intent of doing that, not running a once bankrupt company that already did something similar to what they're doing now in the .com era, and they failed then, and overhyping something that they have no influence on with it being successful, but somehow implying that they do. And that's MicroStrategy. MicroStrategy was not founded to hold Bitcoin. If Tom Lee is going to start a fund, which he is,
that'll be the investment thesis day one.
Correct. Not a redone thesis that's redone.
Yeah.
Here's the current narrative. We need to redo ourselves for this current narrative. So that's the biggest difference. Second, I think Tom Lee is an investment-only person. And so his background, I think, is more substantial. Do I think that Michael Saylor is more influential? Absolutely. But I also think that Tom Lee has a better track record of being more correct in the space that he's in than Michael Saylor does. Has Michael Saylor been correct in the short term? Yes. But has Tom Lee been consistently correct in the short term, midterm, and long term? Yes. And he's a Bitcoin lover. So for somebody like him to pick Ethereum over Bitcoin should speak volumes to people, because he's one of the biggest Bitcoin bulls and still is for price wise. But if he's saying, I'm going to start this for Ethereum, it's probably because of functionality. It's a better functioning asset for what we're trying to do. And I think stablecoin is more his game versus trying to replace the dollar with Bitcoin, which won't happen.
Well, it seems like, if anything, when you got someone like that with that kind of history and background and sentiment around certain coins and crypto as a whole, to kind of, like you said, stake his investment thesis in one particular coin, and with the delta between, let's call it Ethereum and, Bitcoin, the top two, to me, it's a bullish sign for Ethereum in the long run in a big way.
I couldn't agree more, and I'm very happy to be a holder of Ethereum. It's been hard because it hasn't been the sexy thing to do or the popular thing to do, but those are the crypto projects that I have exposure to because I think they actually have utility. Do they move price wise? Do they have as much price action as Bitcoin? No, but they have more utility, and I think that'll actually help them more in the long run.
Well, crypto is one step closer to the real estate industry after significantly studying and working with Fannie Mae and Freddie Mac. Bill Pulte, who is the head of the Finance Housing Authority, I forget the specific department, basically noted he's the director of the U.S. Federal Housing, FHFA. And ultimately, as of last week, he noted to the heads of Fannie Mae and Freddie Mac that they need to prepare their businesses to count cryptocurrency as an asset for a mortgage, which, in my opinion, is a great thing overall for homeowners, for investors, for the real estate industry as a whole, for how many people who have cryptocurrency that ultimately couldn't get that accounted for and taken into consideration for their financial status when qualifying for a mortgage. That brings a ton of liquidity into, not even liquidity, but a ton of equity, I guess, accessible equity into the marketplace without crypto investors actually having to liquidate those assets, pay capital gains, and take ownership of the actual cash itself to then have it applied towards their home purchase. Now, there were certain caveats. They're still working through it. One of the big things is that, if you own $100,000 in Bitcoin, they're not going to give you dollar for dollar equivalents of that 100,000 into.
Why? I thought it was a store of value.
Because of volatility, right? And so that's what they said. Hey, they're still figuring out what that sliding scale is based on what coins are actually going to be considered. Shitcoin is probably not going to be one that they're going to take into account. Versus,
no fart coin?
Who knows?
No Pepe?
I don't know. But, if you're a holder of some of these recognized coins, and I'm sure more and more will continue to get added over time based on these things getting flushed out. But at least, let's call it some of the big movers, the early movers, where there's a considerable amount of, capital tied up into. If that is something that they're going to find a way to bridge the gap to between crypto and real estate, that's going to bring a ton of new buyers, a ton of new, demand into the space. It's going to benefit the housing industry as a whole. And I think it's just a massive, massive big step in the direction of how crypto and tangible assets, tangible investing are going to be bridged going forward. So I think that's a big deal. And overall, a lot of people seem very excited about it. This is something that has really been a long time coming, but we'll continue to keep a pulse on that. What were your thoughts on that?
Which part?
Just in general and mind you, this is just for Fannie Mae and Freddie Mac.
I think it's fine because we're allowed to use our stocks. But the thing is, when we go to lend against them, you're not allowed to use 100% of your stock.
Right.
And typically for the highest quality stocks, you get about a 70% LTV. I think that a similar loan to value is warranted, maybe a little less, but I think it's a good thing. It's a cash equivalent. You can sell it and it will settle into cash. So
yeah,
it should be recognized as a cash equivalent, because then what happens is that bolsters people's balance sheets, so they're a more favorable lending candidate. Maybe the person that couldn't quite get across the finish line now can.
Yep.
So to me, it's a positive. I don't think that there's anything wrong with democratizing the ability to get a loan with a legitimate asset. Crypto is at this point considered by most a legitimate asset.
Yeah.
And so I think that it should be recognized like that when you go to the underwriting table.
I couldn't agree more. Just a quick little update on mortgage rates. Recently experienced a slight decrease for, I think, the second or third week in a row, with the average 30-year fixed mortgage rate dropping to 6.77. Many are thinking that there's going to be rates closer to the 6% range by the end of the year. Again, that's obviously all pending what the Fed decides to do. Fannie Mae and Freddie Mac just released their serious delinquency report. Single-family serious delinquency rates decreased in May. Still very, very low, historical lows. Fannie multifamily delinquency rate is near highest since January of 2011, which a lot of the debt distress right now is mainly in the multifamily sector, a good chunk of that in office as well, but many of the other assets performing really well. So we'll continue to keep a pulse on that. Overall, I think as of today, January 1st, Q3, second half of the year, I'm very excited and optimistic about the second half of the year, especially as a lot of this policy stuff is slowly getting flushed through the system. Some of it in the rearview mirror, some stuff that still needs to get nailed down. But for the most part, big institutional level investors, capital, globally and domestically, are starting to get what feels like a little bit more of a comfort level as to where things are heading and how they can navigate going forward into the tail end of this year and going into 2026.
Yep, I agree. And we're going to be talking about a lot of this stuff in even more granular detail in Napa this year.
Oh, in Napa. That's
Sorry,
right.
I had to selfishly plug it.
Absolutely. We just launched opening signups today for real estate investors, business owners that want to join us and 15 other wealth builders in Napa Valley for.
It's going to be incredible.
It won't be a conference. This is going to be a bucket list adventure experience where we are going to be building, doing breakout sessions, having a whole hell of a lot of fun, and experiencing some stuff that you just cannot buy your way into, even if you tried to Google it. So if that's of interest to you, text the word Napa to 844-447-1555. I think we just sent out the first email today. We're at 6 of the 15 spots filled up. If you've been listening to us, if you align with us, if you can teach us something, we want to get the best of the best, the smartest, the brightest, and those that like to have a little fun in the process.
Amen.
In the room, in the bus with us, having some fun in Napa, September 23rd through the 26th. So if that's of interest to you, check out the Wise Investor Vault for the Napa experience, wiseinvestorvault.com. It'll have it there. Or just text the word Napa, 844-447-1555. Let's wrap up with a beautiful monologue from Mr. Eddie Murphy on, this was one little soundbite from a movie that I love, and Eddie Murphy's words here might change how you see life. This is from The Holy Man. Let's give it a listen.
75 years. That's how much time you get if you're lucky. 75 years. 75 winters, 75 springtimes, 75 summers, and 75 autumns. When you look at it like that, it's not a lot of time, is it? Don't waste them. Get your head out of the rat race and forget about the superficial things that preoccupy your existence and get back to what's important now. Right now, this very second. And I'm not saying drop everything and let the world come to a grinding halt. I'm saying that you can become a seeker. You can be loving more. You can be taking some chances. You can be living more. You can be spending more time with your family. You can be getting in touch with the part of you that lives instead of fears, the part of you that loves instead of hates.
Love me some Eddie Murphy.
That was a great way to wrap up today's episode. We appreciate you guys for tuning in as always. Until next week's, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.
Cheers, y'all.